Singapore's non-oil domestic exports fell for the 9th straight month in November. However, the decline, well, it was an improvement from the previous month, a sign which economists say could mean that the tides are turning. Brandon Tanoto tells us more.
Economists had predicted Singapore's exports to fall 6.4% in November, so it was a surprise when the contraction was at 5.9% on year. The improvement was thanks to growth in non-electronics exports, which grew 1.3% on year, rebounding from an 11.2% decline in October. That's largely due to stronger shipments of goods such as non-monetary gold and specialized machinery. However, this was a different story for electronics exports. Shipments of electronic goods fell by 23.3% on year, extending the 16.4% decline in October. The biggest contributors to the fall were disk drives and personal computers. While the drop may seem alarming, economists said it's due to a high base a year ago, when exporters shipped out more goods because firms were bringing forward their orders to beat the future tariff hikes US President Donald Trump had threatened last November. Last month, Enterprise Singapore cut its NODX forecast for the full year to between -10% and -9.5%. Now that's a further downgrade from the -9% to -8% range previously. But it does expect NODX to pick up in the next year, with growth coming in at between 0 and 2%. And that's on the back of a gradual recovery in electronics.
Electronics will continue to lead the way, and from time to time you will get some additional boost coming from some of the other product classes, like for example pharmaceutical, biomedical cluster. This essentially will bring about a more concerted and broad-based improvement in our export growth next year. I don't expect the recovery to be exceptionally strong. I think it could be tepid, because there are still lingering uncertainties and risks out in the external environment.
Economists say that while a partial US-China trade deal will help revive business spending and exports, it can only lift sentiment momentarily, as there are still geopolitical uncertainties.
Obviously, it could still be a rocky path ahead itself. Brexit still remains something that looms over, global confidence, etc. as well. Polarizing politics around the world is another issue that can continue to undermine confidence, and that in terms could undermine consumption generally as well. So it could be a very, very mild recovery for 2020.
Still, economists say a mild recovery will be a boon for manufacturing and trade-related services sectors in Singapore, as that would mean a better economic growth outlook for next year.